Well, Lowe's acknowledging the home improvement market remains challenging in the company's fourth quarter earnings call. Home Depot reaffirming that outlook, acknowledging ongoing pressure on large remodeling projects, attributing soft home improvement demand to macro uncertainty and higher interest rate environments. Here to discuss how the industry will look moving forward into 2025, we've got Bill Darcy, who is the Global President and CEO of the National Kitchen and Bath Association here. Just want to get your read through some of the earnings reports for the biggest home improvement retailers here in the U.S.
Yeah, great. Thank you for having me on and representing our 55,000 NKBA members. We're here in Las Vegas at Design and Construction Week. So it's interesting that timing that, talking with you because there's so much energy here. And I think what you're hearing from the big box retailers is the macroeconomics, what we're expecting this year, about 0.8% growth. So that's really because DIY, multifamilies, DIY mostly is bringing the market down a little bit. If you look at single family, mid to high income, though, we're looking at 4% growth. So I think that's probably indicative of some of the enthusiasm we're seeing here at KBIS in Las Vegas.
And so all of that in mind, how are you thinking about the renovation market, especially for some of those DIYers, as we know that consumers right now, they're pressed for which projects they can prioritize and the costs associated?
Yeah, obviously we have our skilled labor challenges and some consumer uncertainty, and that's been the stagnation we've seen. I think we do see optimism this year and people coming off the sidelines where they're getting a little more comfortable with those, the mortgage rates as well. But really remodeling is still the driver. I think people want to stay in their homes. They want to invest in their homes. And even if they can't purchase a new home or move, this is where they're going to spend the money. So I do think, on the lower end of the market where the DIYers start in the big box stores, potentially you're going to see still more hesitancy because of the instability in the market. But definitely at the luxury side and the single family higher income side, we're definitely seeing a lot of growth potential.
I wonder what you're hearing from the pro side of these businesses, the contractors, those who are working on construction and trying to make sure that they are sourcing correctly to meet the demand that they're seeing as well.
Yeah, interesting. We have like over 2,000 brands here at KBIS and Design and Construction Week for the International Builder Show as well. And I think that's what they're desiring, sourcing products. Where can they be creative? We have an interesting membership because it's their creativity. I mean, these folks are making beautiful spaces. So they're very resilient, they're very creative, and they work around challenges. And I think they love to source new products. So yes, you will see some shifts in there. I think, the consumers want to maximize their budget with the best products they have and the more intelligence that the pro will have in knowing the best products and services that are available to the consumer, I think makes them more valuable, and trying to get these projects done within budget.
To the extent that it's making its way through the conversations at the conference, how is and what is the pulse check on tariffs and the impact on some of these larger projects?
Yeah, it's interesting because coming into the event, certainly this seems to be topical, the biggest top of mind. And I was a little concerned, like, what are we going to say? We have to really, it's too early to tell. I mean, that's the truth of it. However, you would never know that on the show floor. The optimism is so strong. And I do think people believe these things will settle down. I think this is disruptive. I mean, we have immigration tied in and all this, things that it's hard to understand even for the average contractor consumer. But it's surprisingly mild or non-existent, I would say.
All right. Well, if you see a stress ball tchotchke on the floor, make sure you send one my way, Bill. Just lastly, while we have you here.
Absolutely. Yes.
Lastly, while we have you here, as we are thinking about the broader mortgage rate environment and how that impacts everything that we've been talking about, to the potential for new home build outs, for the potential for remodeling projects as well, as many are spending further in as they're not going to be, for some of them, moving anytime soon, especially if they're sitting on a good mortgage rate and don't feel like they need to refinance at all. How closely are you tracking what's taking place within the mortgage rate dynamic as it passes through to some of the biggest contractors and suppliers?
We were, the magic number we felt was 5%. Many of the mortgages, in the market are well below 5%. And then that's really what's somewhat times driving that remodeling versus moving. I mean, no one's going to move from a 2% mortgage to a plus 5%. But I think we feel consumers are getting a little more comfortable with that 5% and not going to stay on the sidelines forever. But we are tracking this very closely. I'm actually going to, we're going to see what the Fed's going to do. And I don't know that they're going to be very aggressive, is what we're feeling this year. But despite that, I think as the consumers feel more and more comfortable with 5% and really their desire to really stay in their homes, this really does drive remodeling. So yes, we feel for the construction side and the new construction side and new home side, but we really feel that that even higher interest rates sometimes is the driver for further remodeling.
Bill, thanks so much for taking the time here.
My pleasure.
I'll be looking out for that stress ball.
Absolutely. See you soon. Thanks again.